dive in. Hi, everyone. Welcome to Coping with COVID Week 8. Today is May 11th. It's 3 o'clock Eastern, and it is so wonderful to see so many familiar faces here today. We'll go through some unemployment for Texas and California and talk about PPP. We've had a lot of questions come up over that over the past week or so we'll touch on that. And then I'm hoping to end with a conversation around kind of articulating your value right now as a creative individual and really effective ways of doing that make sense at this moment in time. I do want to share as well, I was overwhelmed with emails last week of people saying they wanted these to continue, which warmed my heart in ways I can't even begin to express. So I will continue doing these on a weekly basis into the foreseeable future. And what I'm thinking is we'll not do one on Memorial Day. That's May 25th. So everybody can just relax on that afternoon. And then we'll restart in June. And I'm thinking that instead of only talking about COVID stuff, although I imagine we'll still be talking about it in June, we'll kind of choose one theme for each month, whether it's pricing strategies or budgeting or anything sort of related to, normal things you have to think about. And we'll kind of organize the content over a theme each month and then take questions on an ongoing basis. So that is super exciting for me, and I appreciate all the enthusiasm and the support. And I love that you continue to get so much value out of these. So thank you for that. I really appreciate it. And also, if you have a deep burning desire to talk about something or a particular theme, go ahead and share that with me because I will absolutely incorporate that if it's a theme that's coming up for a lot of people. Okay, so with that in mind, for those of you that don't know me, I'm Elaine. It's lovely to have you here. And as you know, all of this information is educational in nature, especially because this information is changing in real time. And as we're figuring out different aspects of scenarios that, everybody's just coping with in real time and trying to figure out what all of this means. So for today, we'll be talking about the stimulus filing deadline. I'll touch on that. Don't panic. Definitely don't panic. But if you do need to share your payment information with the IRS or your bank account information, you need to do that by Wednesday. We'll also touch on unemployment and some PPP stuff, and then value. So let's talk about your stimulus. First of all, who drop in the chat if you have not gotten your stimulus yet and you were expecting it. I know I've done a couple of sort of unofficial surveys, and a lot of people have gotten their stimulus payments. But if you have not, give me a quick heads up in the chat so I can know sort of who we're talking about. You definitely want to make sure, if you're still waiting for that stimulus, the first thing is to make sure you are actually eligible for that stimulus payment. So that means you have a Social Security number and you are not a dependent of someone else. This piece sometimes throws off the young adults in our midst and any individuals who may be full-time enrolled as college students. You might still be being claimed as a dependent on someone else's tax return, which means you are not eligible for your own stimulus. And then the other criteria is if your adjusted gross income on your tax return in 2019 was more than $75,000, you're not getting your full stimulus amount. And if it was more than $99,000 as a single individual, you are totally phased out of all the stimulus money. So as you're looking at your 2018 or 2019 tax return, look for that adjusted gross income number. And if that is more than $75,000, you're not getting your full amount. But for most individuals, their adjusted gross income falls sometimes substantially below that amount. So if you meet the income threshold amounts, if you are not claimed as a dependent on anyone else's tax return, and if you have a Social Security number, all of those things mean you should be getting your stimulus check. That's that $1,200 payment from the IRS, and that should be coming in sooner rather than later. If you have not gotten it yet, I'm seeing a couple of people saying saying, okay, you are eligible, or you haven't gotten it yet, but the IRS has said it will be deposited. I love that you are checking in with this IRS website. That makes me feel really good, because if you are eligible, you definitely want to check your status. And the place you do that is at irs.gov/coronavirus/getmypayment, right? And you have to enter some sensitive information. So just double check the URL at the top to make sure you are in fact on irs.gov, because you don't want to be entering this information on some, random site that's set up to look like irs.gov. So make sure you're just protecting your information. And then it should tell you what's the status of your payment. Either you are eligible and it will be deposited on a particular day or within a particular time frame, or it might say that they're still waiting on some information from you. And if they are waiting for information from you, it's probably the bank details that they're waiting for. So you want to go ahead and enter your bank details. Now, this is especially true if you are someone who is a non-filer. That means someone who is not required to file a tax return, maybe because your adjusted gross income or the amount you earned was less than $12,000. So as a single individual, your standard deduction is going to wipe out that amount. Or for some other reason, if you were not required to file a tax return, you are still eligible for this stimulus payment, and you want to make sure you've entered your bank information. So the deadline to enter your bank information is Wednesday at noon, okay? So if you fall in this category, go ahead and enter your bank information. If you are just waiting because you are just getting processed through whatever system the IRS is using to process those, just keep hanging out and being patient. But as you check the status, if it says the IRS is waiting for information, definitely get that in by Wednesday. Now, if you miss that deadline, it's also not the end of the world. All that means is you're going to get a paper check in the mail instead of something direct deposited to you. So probably not a big deal. And your amount should be up to $1,200. If you want to work through the calculation of what you would get if you're in that phase out range, so you made more than $75,000 of adjusted gross income but less than 99, there are some tools to help you estimate what your payment would be, but it goes down by about $100 or so as you start making more money. So pay attention to that deadline if you do need to enter your information. Sounds like most people, just keeping an eye on some of the private messages I've gotten, sounds like most people have gotten their payments already, which makes me very happy. So definitely enjoy that and definitely keep focused on that. Okay. Unemployment is the other thing that I promised we would talk about this week. And I thought it made sense just to kind of go over some of the common vocabulary again, because there are a lot of acronyms going around, and this is confusing and overwhelming in a lot of different ways. So in general, unemployment covers some percentage of your income on a pre-unemployment basis. The very generous states give you about 2/3 of your pre-unemployment income. The stingier states give you closer to 50% or a smidge less. And remember, this amount is taxable income to you. So if you are someone who is receiving unemployment, that counts as taxable income. So you need to either be withholding taxes from those amounts, or you need to be setting aside some of those amounts to pay your own taxes when you file your tax return next year. In most states, you can ask the state to do some withholdings from your unemployment check. The states are overwhelmed right now. So, if you don't want to mess with their websites again, I do not blame you. But if I were you, I would definitely set aside, depending on what your income is, maybe I would set aside at least 10% of what you're getting to pay for your taxes. And if you are someone who typically earns considerably more than the unemployment amounts, or $20,000 or $30,000 a year, you might want to be setting aside, say, 20% of your taxable income amount, so that when you file your tax return next year, you aren't in a position where you have to pay taxes and you don't have the money for that. So In this new kind of expanded temporary unemployment world, there are a couple of extra things. So the first extra program is what we're calling PUA. That's the Pandemic Unemployment Assistance Program. This basically means that someone who is not normally eligible for unemployment is eligible now. So that counts self-employed individuals, our freelancers, our contractors, gig workers, 1099 individuals. All of those individuals now qualify for regular unemployment benefits in the states where they live, right? Except many states have set up separate filing systems. So if you are a W-2 person who has been laid off from your job, you apply through regular old unemployment insurance, just like you always would. If you are someone who's self-employed, who has lost income, you apply through your state's PUA unemployment program. Or if you live in Texas, they're calling it DUA for disaster unemployment assistance, just to make things even more complicated, right? So PUA is basically what extends unemployment benefits to individuals who would not normally be covered. Then there's the extra piece called FPUC, the Federal Pandemic Unemployment Compensation piece. That is the extra $600 payment, which is coming between March 29th and July 31st. In all the states I've looked at so far, this extra $600 piece is automatic, meaning it's just getting added to whatever normal unemployment benefits you would be eligible for, which is really good. You don't have to do anything extra. You just get $600 extra a week, right? So that's the FPUC piece, that extra $600 piece. And then the third part of new temporary unemployment world is called Pandemic Emergency Unemployment Compensation. And this is the piece that takes regular unemployment that would normally last for 26 weeks, and it extends it for 39 weeks in total. So that means there are 13 extra weeks of unemployment that everyone is eligible for. So these three different pieces, and sometimes we use all of these words interchangeably, but really it's PUA means more people get unemployment. This FPUC is the extra $600 a week piece. And then the PEUC is the piece that extends unemployment for 13 additional weeks. So when we're talking about, for example, one of the questions that is still unanswered is, what if you were someone that had a W-2 job and you were laid off, and you had self-employment that you're not able to do right now, whether that is 1099 work or any sort of extra income you earned through your creativity? It appears that in most states, you can have either unemployment or unemployment through your self-employment world, but not both of those things. And so that's something that I think states might still try to figure out, because it's certainly reasonable. And we've certainly heard this from individuals on these sessions and on these calls. It's definitely reasonable that someone could have lost both W-2 income and their self-employment income. And so in theory, they should be able to get unemployment for both of those sources of lost income, plus the $600 on top of that. Now, you shouldn't get $600 twice, right? But the systems, it doesn't seem like they're really accounting for the fact that people may have lost both W-2 sources of income and self-employment income. So I'm still paying attention to that and watching it closely. But if you are someone who has lost W-2 income, you're probably filing for regular unemployment and you're getting your extra $600 automatically. If you have lost self-employment or freelance or contract income, you're probably applying through your state's Pandemic Unemployment Assistance Program, and you're also still getting that extra $600. And of course, all of this is administered by the states, and all of our states are different, as we have seen. For those of you in Texas, I spent some time digging into your website, and I have to say the Texas website so far is my least favorite, just because it is the least design friendly. There's great information there, but it's not super pretty to look at. So if any of you savvy designers in Texas want to get your hands on this website, I imagine they would appreciate that. So this is what your website looks like in Texas. I would suggest if you are someone who is self-employed, you follow this hyperlink at the top to self-employment, because that's where a lot of the good resources are. Also in Texas, they give you a link to some frequently asked questions that are really helpful right here at the top. So if you already applied for unemployment in Texas as someone who is self-employed, you just need to hang out and be patient. They will be mailing you information, not emailing, they will be snail mailing you information about that, right? So if you were super on top of it as someone who is self-employed and you applied for unemployment right away in Texas, good job on being so on top of things. Now you just get to hang out and be patient and watch your mail carefully for something they might be sending you. If you are about to start, go ahead and go to ui.texasworkforce.org. And as part of going through and answering the questions on this website, you will be told that you do not qualify for regular unemployment because you were self-employed. So you can apply for DUA. And by DUA, all they mean is PUA, or what all the other states and the federal government are calling PUA, the Pandemic Unemployment Assistance. Now, as you go through this process, you have to do something special in Texas. You have to choose reduced hours as the reason for your job separation. Now, the question, why did you separate from your job feels like a weird one that doesn't apply to you if you're self-employed, which is why they tell you reduced hours is the answer to that question. And there's also a separate question that asks about the disaster impact, and you want to choose COVID-19 for this section. And that'll navigate you through to disaster unemployment assistance, or PUA, in Texas. So go through that entire process. And then the Texas system will tell you you are rejected for regular unemployment, and you might panic for a second, but that's what's supposed to happen, right? You need to be rejected from regular unemployment in order to qualify for self-employment unemployment in Texas. And I'm sorry about this. I know how frustrating this is, and we're seeing this in a lot of states. And it feels really weird to go through in detail and then realize that you're being rejected, but know that you are supposed to be rejected so that you can qualify for pandemic unemployment assistance. So the next thing that's worth noting in Texas is that if your Schedule C, so line 31 on your Schedule C, right, that's your net profit, if that amount was more than $20,800, you want to go ahead and provide your Schedule C to the state of Texas. If your line 31 was less than $20,800, and remember, this is all of your income minus all of your expenses on Schedule C. So if that net amount was less than $20,800, you don't have to provide anything. You will get the minimum pandemic unemployment amount in Texas. This is only a Texas minimum. All states are different, right? But you will automatically get your $207 per week, plus that extra $600 for the weeks when that extra $600 is in effect, right? So if you earned less than $20,800 as someone who is self-employed for all of 2019 in Texas, you basically don't have to do anything other than apply, and then you'll get $207 a week plus $600 for the weeks when that extra amount is automatically added. The only reason you would want to provide your Schedule C is if your net profit was higher than $20,800, and that would mean your weekly benefit, that $207 amount, would be a little bit higher. So that might make sense for you. It also helps if you already have your Schedule C from 2019 done. There's also an additional 13 weeks of unemployment. You automatically get that in Texas, just like in most other states. And if you're playing around with kind of what your benefits would normally be, Texas has a pretty fantastic benefit estimator that allows you to enter some earnings information that you had, and then it'll tell you what your benefit would be under unemployment. Now, I wasn't able to play around with this in detail without filing a claim in Texas, which I can't do. So I'd be curious to know if this calculator is working for folks who had self-employment income, or if this is only working for people who fall under kind of the normal unemployment system. So if you are one of my Texas friends on the call and you want to play around with that, I'd be curious how that goes for you. You do have to go ahead and recertify regularly. You do not have to be actively searching for a job. And normally there's a waiting period, but you don't have to worry about that right now. Also in Texas, normally it's about 3 weeks from when you file to when you get your benefits. I would expect it to be a little bit slower now because things are a little crazy for everyone. So Texas, that is your unemployment situation. For those of you in California, I like your website so much better than Texas's. It's prettier and easier to look at. And as you navigate to edd.ca.gov/unemployment, I found this is what your landing page looks like. And there are some links here, and that's kind of nice. But what you probably want to do is click on this EDD logo on the top left, and that will take you to a page that shows you all the COVID-19 resources. They're not sort of very obviously provided on this landing page. So click over here to the EDD's homepage, and that's how you'll get to some of them. So in California, if you are someone that had a W-2 job and you were laid off, you qualify for regular unemployment, and you should go ahead and just go through that process. If you were someone who was self-employed, as of April 28th, you could or should have applied through the special pandemic unemployment assistance program in California. So the way it works in California means you file for unemployment, you receive a notice that you're eligible for $0, and then keep going, right? That's probably what happened if you applied before April 28th. And it seems like keep going in California means they want you to reapply for pandemic unemployment assistance after April 28th. The only reason this would not be true in California is if you were someone who maybe was treated as an independent contractor by your employer, but you believe you should have been treated as an employee. In that case, they encourage you to request a wage investigation instead of going through pandemic unemployment assistance. But for most people, that's not their situation, right? If you're working on a film or you are self-employed or whatever, yeah, you're paid as a 1099 person. So as of April 28th, you could go through the special PUA process on EDD's website. The other thing that's interesting about California, this is the only state that I've seen sort of spell this out very clearly. California says if you are eligible for regular old unemployment from your W-2 job, California says they cannot legally pay you under the pandemic unemployment assistance piece, which I think is really interesting because of all states, right, especially California, there's so many individuals who have W-2 jobs and self-employment income. So this should be a great example of when you're getting unemployment from both pockets, if you will, right? Because if you've lost your W-2 job and if you've lost all of your 1099 work or your self-employment income, right, you should be compensated for both of those things. But California says you have to go through normal W-2 job unemployment first, right? And then the only way you can get to pandemic unemployment insurance is when that benefit comes back as zero. So this is a little wonky. I would imagine at some point some state is going to address what happens if you're eligible for both. But in California, it's either or. You cannot do both. And just to clarify again, when I'm saying PUA here, I'm talking about unemployment for self-employed individuals, right? I'm not talking about that extra $600 a week, because that is automatically included. You automatically get your $600 per week. And in California, you should also automatically get $167 per week. That's your minimum unemployment, plus that extra $600 for the time period from March 29th through July 31st. That's the time period where that extra $600 is in effect. As you go through California's website, they will ask you to just type in what your income was from your tax return. And then if it's fine, it's fine. You'll get the minimum. Everybody is all excited and the claim will be processed. But there's a chance that EDD will contact you to verify any sort of higher earning amount. So let's say your income would normally entitle you to more than that $167 per week amount. EDD may contact you and ask you to verify what you reported as the income from your tax return, in which case you would send them probably your tax return, but you could send them additional information if they needed it. Here's the question that came in that we were discussing at the very beginning of the call. This person only had 1099 work in 2019. And then the new form, they were paying close attention, which is such a good thing to do, just to kind of pay attention to what's coming out from your state. This person jumped onto the new PUA system when it went live on April 28th, and then they applied. Even if they don't get unemployment assistance, do they automatically get PUA? So here's what's kind of interesting. They will not get unemployment insurance under the regular system. They will get pandemic unemployment assistance, which is probably $167 a week, maybe more if you earned more, and then automatically get that extra $600 amounts, right? Sometimes we say PUA and we're talking about that extra $600 amount, but that technically is something different in unemployment world. And unfortunately, I don't have any additional insights than that, but you can absolutely appeal if you are rejected, because you definitely should not be rejected from this. Okay, so that's sort of COVID unemployment. And what we saw today, both the states we looked at today, Texas and California, require you to be rejected from regular unemployment before they look to see if you're eligible by this expanded program that covers more individuals. And I would say, in addition to looking at the frequently asked questions and any COVID resources that they are updating, definitely, if it's helpful, get your hands on the regular state unemployment handbook, because those are really helpful to kind of dig into. And again, I did not see one of those application guides in either Texas or California. New York and New Jersey are the two states that have really good ones there. So, you know, it would still be nice if all states did that, and maybe they will, but odds are it might be too late to help you since many of you are jumping on this so quickly, which is amazing. The main question we still don't know, and I've touched on this a couple of times, is what happens for someone who should get unemployment from both a W-2 job and 1099 work. I have yet to see a state who has addressed this. The only potential could be Pennsylvania, where you're applying completely separately. But California, for example, says very clearly you can't have both. So we're still going to pay attention to that. And I'm going to take a peek at the chat because I've seen a couple more questions come in. An unemployment question: how do you know how much you make through side jobs before unemployment will drop your benefits? That's a great question. You're in Indiana and you made $400 last week on Library Talks. Congratulations. But you got 0 benefits this week. Yes, and the number varies by state. For example, in New York, you can make up to $508, which is pretty generous. In most states, you can earn up to whatever your unemployment benefit is, not counting that pandemic unemployment assistance piece. I'm sorry, not counting that extra $600 piece, right? So you can make up to what your regular unemployment is, but as you start earning money, your benefit will start going down. So Karen, as you say, yes, you could do work as a volunteer. That would be perfectly fine if you wanted to do that, especially if that extra $600 piece would put you in a better position, certainly through the end of July. But you're absolutely right. You do have to report whatever you earn as you recertify. And if you earn, in most states, up to your unemployment amount, you start losing benefits. And that's really just up to you how it makes sense for you financially and personally to keep serving the community. Another question that came through was about those stimulus payments. And this person said it had said, you know, pending through the IRS website. And this person just checked. And now this person's deposit is scheduled for May 13th. So congratulations. Let us know next week if your dollars came in on Wednesday. Another question here. Oh, I'm glad this makes you feel less alone. That's wonderful. And Karen, you need to do your 2019 taxes and you'd like to find a new accountant or do them yourselves. Yes, I do have some suggestions. First of all, thanks for asking about taxes. One of the blurb headlines I saw this morning is that the IRS is thinking about extending the tax return deadline even more. So from July 15th through possibly September 15th. This is not official yet. This is just something they're considering. And here would be my suggestion. Go ahead and do your taxes. I know there's a lot going on right now and taxes are probably the last thing you want to think about, but if you have not yet filed your 2019 taxes, go ahead and do them so that when things get back to normal-ish, whatever that looks like, you can focus on that instead of thinking about your taxes. And if you are thinking about doing or hiring someone to do your taxes, couple of different options. Number one, I really like Brass Taxes as a general service. The website is brass, B-R-A-S-S, taxes, T-A-X-E-S.com. This is a company started by a guy named Russ who lives in St. Louis right now. And they have sort of virtual tax preparation services all around the country. So it doesn't matter what state you live in, they can handle it. They also can handle an LLC tax return filing if your LLC is single member or taxed as a partnership, or S corporations or things like that. In my sort of, based on what I can tell, they're not like super hands-on with aggressive tax planning type of strategies. But if you're looking for someone to do your taxes, they are a great option and they are really, really reasonably priced. And they have a little calculator on their website so you can see kind of what your tax return preparation would cost. So that's a really good option no matter what state you live in. The next option would be talk to a couple of other people kind of in your geographic area and see who they use, because peer recommendations is a great way to find an accountant, and it's a really, really good option, especially you know, in some of the cities where many of you are congregating. So that could be a really good option as well. And then the third thing that you might want to look into is take a scan through the board of directors from any of your favorite arts nonprofits in the area. And here's why I would do that. Odds are there are probably some smaller tax firms or accounting firms that have individuals that serve on the board of directors of different arts organizations. This could be like your state, not your state, but probably your city arts councils, your local theater, maybe a not-for-profit gallery, any of those arts organizations. Just glance through the list of board of directors and see what accounting firms are listed there, because that tends to be, we tend to see smaller and mid-sized accounting firms that support the arts, that have people serving on the boards, and sometimes that can be a really great resource for tax preparation services as well. And a clarifying question in the chat. Yes, as of right now, everyone has until July 15th to file their 2019 taxes. So July 15th is the number you want to keep in mind. And even if that gets extended further, go ahead and file your taxes would be my advice. Okay, is there still PPP? Yes, there is still PPP. This is that Paycheck Protection Program that you can apply for through the Small Business Administration. This is what the application looks like. It's not super complicated, but what I want to draw your attention to is this average monthly payroll amount. The SBA instructions says to use your number from Schedule C, line 31, divided by 12, and that will give you your average monthly payroll amount. And we want to make sure that your PPP loan is forgivable, meaning you do not want to pay it back. So what you want to do is, as you receive the money, right, and you'll probably get at least twice your average monthly payroll amount, maybe 2.5 times your average monthly payroll amount. Definitely, as you're thinking about paying yourself during that 8-week period, you want to base that calculation on Schedule C, line 31, divided by 12, right? So if that means you're making a monthly transfer to yourself of that amount, that's okay. If you want to do it on a weekly basis, you can, but I would not take your total income divided by 52 because that could skew your calculations a little bit. What I would do is take the amount from your PPP application, right? So whatever that was, your average monthly payroll amount, and divide that by the number of weeks there are in the month you're looking at, right? So that feels a little convoluted, but the ultimate end result you want to get to is that you are paying yourself 2 months worth of salary as part of PPP, right? And so as long as you're doing that, and as long as the rest of it is going to rent or utilities that were included on your 2019 Schedule C, then it should be forgivable. Here's the thing though, should is a dangerous word, right? And so technically this counts as a loan right now, and then at some point in the future, you will apply for that loan to be forgiven. And as part of that application, you will probably have to show documentation that you used the funds on your payroll and then acceptable expenses like rent and utilities. The SBA has not issued any guidance about what that will look like yet, nor have they shared kind of what the application for forgiveness will look like. They will do that at some point. My guess is early to mid-June, because that's when people are going to start really needing it, following kind of that 8-week trajectory. So for right now, if you are in PPP world, definitely make sure you are following the same calculations you used in the application and using those to base kind of what you're paying yourself and then your other expenses. And I know that's confusing. Question in the chat, for PPP, you need to have filed 2019 taxes. Great question. Kind of. Technically, the answer is no. However, the loan amount has to be based on your 2019 taxes. So the SBA answered in one of its questions or in the interim guidance that it would accept a sort of pro forma Schedule C from 2019. So a sort of not officially filed, but what the Schedule C would look like. They will accept that if you are applying for PPP. But, you know, if you haven't filed your taxes yet for 2019, you know, it may not be worth it for you to kind of jump through all the hoops, but that's totally up to you. So any other questions in the chat? I have one more clarifying point. Someone said that they will owe taxes for 2019, so they're going to wait as long as possible. I totally agree with that. Just remember that the filing deadline is July 15th, and you can file early, but then just wait until, say, July 14th to pay. That's okay. But if you want to wait on everything, that's okay too. I would just have it ready to go on the off chance that work picks up for you at some point before July 15th. Okay, I'm scanning through. I don't see any other questions that I haven't addressed? Okay. So with that, I'm going to switch gears on you to think about kind of the long term. And for those of you who have done kind of any of the bigger programs or ongoing programs that we do regularly, some of this will feel familiar to you. But I thought it was useful to think about taking some time right now, while we have some time to think strategically, to really think about what it is that you do and how you add value to the world. So what do you do is my least favorite networking question, but it comes up regularly. And oftentimes I will ask people this question and they will give me an answer that's a noun. So they will say, I'm a painter, or I'm a dancer, I'm a musician. They answer it in sort of noun form, right? And that's okay. It's handy. Everybody sort of gets that quickly. But that doesn't really capture the value of what you do. And many of you know I teach graduate students. So sometimes if we push a little bit beyond the noun, sometimes we get way too into the weeds around something that is conceptual, or like a full artist statement, or something that is really interesting to someone who is like deeply involved in the industry, but not really interesting to someone who's more casually involved, right? And frankly, as someone who doesn't know all that much about art history and influences and all those other things, right, this is often too much information for me even. So what we're looking for is kind of that Goldilocks spot in the middle. And in entrepreneurial terms, we call this a unique value proposition. This is the singular statement that's longer than a single noun, but shorter than your full artist statement, right? That captures the real value of what you do in verb form rather than noun form. So if we were to break down that definition, unique value proposition, this is essentially how it breaks down. What is unique? Well, that's what makes you different and special as a creator or an educator or an individual. The value part is what you do to change the world. And the proposition part is how you go about doing it. And it's worth acknowledging that it's okay for this to change, especially right now, because the context of what you do really does matter, right? It can sound very tone deaf if you are, say, sending out a marketing email and not acknowledging kind of this moment in time, right? And so for most individuals, or many individuals in the creative space, the things that make you unique and special and different haven't changed, right? Those are still the strengths that you bring to whatever you do. And what you do and the people you serve with what you do may not have changed that much either. They may have changed a little bit, but there might not be super dramatic changes in those two groups. But how you do what you do may have changed really dramatically. And so it's worth kind of re-examining your unique value proposition right now to see if you need to tweak it at all and what that looks like. Without going into like a full-on discussion of this, because as some of you know, this can be definitely like a 75-minute workshop all by itself. Your unique part are your strengths. The value part is essentially your what you do. Think about a verb there instead of a noun, and then who you do it for. And then the proposition part is the how. So what makes you unique and special, what you do in verb form, who you serve, thinking about your customers and clients, and then the how you go about doing that. Those things essentially come together to form your unique value proposition. And the unique value proposition typically lists out the what, for whom, and how, or the most interesting parts of that. It doesn't necessarily list out your strengths. Your strengths kind of inform what you do, for whom you do it, and how you do it, but you don't necessarily have to list out your strengths unless it really makes sense for you to do so. And those things come together to essentially make one, maybe two sentences that essentially introduces yourself, says what you do in some sort of powerful way, and then connects what you do to the object of who you serve. So I wanted to share a couple of examples. These are all from my students from fall of 2019. This first student is an installation artist. And when I first met her, I said, what do you do? She said, oh, I'm an installation artist, or I'm a painter. I was like, okay, well, that's not really interesting. And she ultimately got to a point where her unique value proposition is, I disrupt the expected environment with large scale paintings and installations. That's cooler. That is a much stronger sort of unique value proposition and distillation of what she does into a powerful statement. Another student is more than just a photographer. This student explores racial and gender binaries through introspective documentary photography and video. I still stumble a little bit over the wording documentary photography and video. It feels a little clunky, but this student felt really strongly about this being part of the essence of what they do, and so they left it in, and that's perfect. Another student is an illustrator, essentially, a comic illustrator, but that's not all that interesting, right? What do they really do? They reflect pop culture using comedic cartoons. It's a stronger, more powerful statement that can then be followed up with something they're working on now that you can then translate into a funding application or a conversation with someone you're going to collaborate with, or any sort of interesting thing that you can share on your website or on social media or however you communicate with your customers and clients. So for example, for this student, he might say, I reflect pop culture using comedic cartoons, and right now my work is focused exclusively on COVID-19. And then it can jump into a more interesting conversation. Another student explores memory through clay, which I think is really interesting. The most interesting thing about this student as well is that they both make work and educate about clay, right? So they teach classes and then they also make and sell their work. And so they really wanted one UVP that would capture both of those things, but not necessarily having two separate different ones or making them feel different. So this is where they settled. And then lastly, this final student facilitates meaningful experiences by creating cozy video games, which I think tells you so much in this moment, right? And so if this student were thinking about building a relationship with perhaps a sponsor of a video game, she could definitely tease out some usable information from the people who are playing the games and maybe how they align with those individuals she's targeting. So that's your little bit of bonus content. I would challenge you to think through maybe this week what your own unique value proposition is and how it has and hasn't changed, to think about how you can continue to use it and adapt going forward, especially if things start to open up and loosen up economically, and if they don't, if it requires you to adjust or think about what you do in a slightly different way, this could be a really good time to think about the different paths you might choose to follow. So this week, we talked about Wednesday's stimulus deadline. So definitely if the IRS is waiting on banking information from you, make sure you get that in by Wednesday. And at least 2 people have May 13th as their estimated deposit date for those stimulus checks. So I hope that those of you who have not gotten your stimulus checks get them by Wednesday or sooner. We touched on unemployment in Texas and California and the fact that the PPP forgiveness guidelines have not been published yet. But if you received PPP, you're going to want to document that you are spending your PPP dollars in accordance with what you put on your application. And then we touched at the very end on redefining your value. I have at least one more question in the chat. This question is, would you explain if either or both FPUC and or PUA is considered as a Social Security credit? Oh, thank you for reminding me about this question. So this person is wondering if unemployment will count toward those, I think it's 40 Social Security credits you need to claim Social Security eventually. Thank you for reminding me. The $600 will not, right? So that is very clear that that will not count toward a credit. What's less clear is if unemployment will. I would say under normal circumstances, the answer I found is that generally no, it will not count, but these are not normal circumstances. I could not find any specific guidance, Kay, about whether this specifically will count as a Social Security credit right now. If I come across any, I will definitely let you know. I would say probably you're smart to assume the $600 will not, definitely not. And then it's kind of a big question mark about whether the other regular unemployment will count. Normally, the answer is usually no, but these are not normal times, so it wouldn't surprise me if there are some adjustments made, but I haven't seen any guidance about that yet. Another question, EIDL is a loan. Yes, EIDL is considered a loan that came from the SBA, the Small Business Administration. Now, early on, before PPP was approved, there was a portion of EIDL that could be turned into a grant. I think it was up to $10,000 that became a grant. So if you were someone that got an EIDL way early on, it is possible that some of your EIDL was considered a grant. If you are in the world where you were applying for it later, and especially after PPP was approved, your EIDL is probably going to be treated as a loan, not a grant. Another question. This person thought the $600 wouldn't be taxed. Your unemployment took out taxes for both UI and PUI. So definitely your regular unemployment is 100% going to be taxed. My understanding is that the extra $600 will be taxed as well because it's considered unemployment. I don't mind clarifying that though. We know that $1,200 stimulus is not taxable to you because that's essentially a credit on next year's tax return that you're getting early. So that piece is not taxed, but I will double check, Karen, on whether or not that extra $600 is taxable. And I will follow up with you. Okay. Oh, and this person said they did get some of their EIDL early on that was treated as a grant, which is excellent. You are very welcome. Other questions coming through? Yeah, I got a message. Thank you. I'm glad I'm continuing these as well. Thank you for your enthusiasm and wanting them to continue. Ooh, question from Jillian. Can I repeat what I just said about some money being a grant toward next year's taxes? Yes, although it's not a grant toward next year's taxes. The stimulus dollars, that $1,200 payment that individuals are getting, that is an advanced credit, right? And so when you think about tax world, you have your income and then you calculate your tax based on that income. And then there are special tax credits that are used to reduce the amount of tax you owe. Right? So the earned income tax credit is a common example of that, or the American Opportunity Credit is another one that relates to education. So these tax credits look at how much you owe in taxes and then reduce that amount on a dollar for dollar basis. So the way these stimulus payments were set up is essentially they are credits on next year's tax return, right? But they are refundable credits, which means even if you don't owe any taxes, you still get that money back, right? So you're not penalized if you don't owe taxes, right? You still get that money. And these are credits that are being paid early, which is why we're getting them now. So when you calculate your taxes for next year, you probably won't notice any difference. The only difference would be, let's pretend you were someone who were not normally eligible for this $1,200 payment because your adjusted gross income in 2019 was too high. When you file your taxes for 2020, if your adjusted gross income is quite a bit lower, you're going to get your $1,200 credit next year when you file your tax return. So it is not sort of an advanced refund or anything like that. It is a credit on next year's tax return that everyone is getting early, but it won't normally have any impact on your taxes for next year. Clarifying question, does taxable means it works as a credit or not? Great question. Tax credits are not taxable to you, right? So this $1,200 stimulus payment that's coming from the IRS is not taxable income to you, right? It is just a credit from next year's tax return that you're getting a little bit early. And that's why the $1,200 isn't taxable income to you. It's basically free incentive money that's coming to you early. So that's not taxable. Unemployment insurance, however, is more like earnings that you would normally have. So that is taxable to you. I hope that helps. Okay, I'm not seeing any other questions in the chat, which means I either answered them all or you are totally and completely confused. In either case, I'm going to go ahead and wrap up this week's recording. Thank you so much for joining us. It was great having you here today, and I will follow up and see you next Monday at 3 o'clock Eastern.